I need you to pay attention to the next 24 hours like you've never watched a market before. We are potentially, and I'm choosing my words carefully here, we are potentially in the 24-hour window before silver makes a move to $100 that doesn't come back down. Not a spike that retraces, a repricing, a permanent reset of what silver costs in the physical market. I know how that sounds. I know you've probably heard silver to 100 predictions for years, and they've all been wrong. I've been skeptical of most of them too. This is different, and the reason it's different is because two things that have never happened simultaneously are happening right now, in the next 24 hours, and the combination is what breaks the market. I'm OG John, this is John Asian Guy, and I'm going to walk you through exactly what's happening, why the next 24 hours matter specifically, what the path to $100 looks like, and what you need to do before the window closes. If I'm wrong, I'll tell you exactly what I missed and why. But if I'm right and you're watching this 48 hours from now, you're going to wish you acted when you first clicked. Let's go. Okay, facts first. Two separate events are converging in the next 24 hours. Event 1, the COMEX delivery crisis. March delivery month just started, and we've got a problem that's been building for 3 months and is about to break. Total silver ounces standing for delivery in March, 47.3 million ounces. Total registered silver available for delivery at COMEX, 51.2 million ounces. You see the problem? We've got less than 4 million ounces of buffer in the entire COMEX system. That's roughly 8% cushion between total demand and total available supply. In normal times, that's fine. People roll contracts, they cash settle, not everyone actually takes delivery. But these aren't normal times. In the last 72 hours, we've seen 0 rollovers. Everyone standing for delivery is demanding physical. And here's the kicker. There are reports, unconfirmed but from 3 separate sources I trust, that 2 major institutions have sent delivery notices for a combined 8 to 9 million ounces. If those notices get processed today or tomorrow, COMEX doesn't have the metal, not without pulling from eligible inventory, which creates a cascade of problems. The CME has a meeting scheduled for tomorrow at 2 p.m. EST, emergency meeting, not on the normal calendar. The agenda hasn't been published. When exchanges call emergency meetings during delivery months when inventories are this tight, it's not to announce good news. Event 2. The Asian Central Bank Coordination. Here's the part most Western analysts don't know because they're not watching Asian financial media. There are credible reports from sources in Singapore, Hong Kong, and Jakarta that 4 Asian central banks have coordinated a simultaneous announcement for tomorrow morning Asian time, tonight EST. The countries, Thailand, Indonesia, Malaysia, and potentially Vietnam. The announcement, official silver reserve accumulation programs and the addition of silver to their foreign exchange reserve baskets. Now, individually, these aren't massive economies, but combined, we're talking about $1.2 trillion in foreign reserves. If even 2 to 3% of that gets allocated to silver over the next 12 months, that's $36 billion in buying. At current prices around 42 Oz, that's 850 million ounces of demand entering a market that produces about 1 billion ounces a year and is already running a deficit. That's roughly 6 hours before the CME emergency meeting. You see what's happening? Asian central banks announce coordinated silver buying right as COMEX is potentially facing a delivery crisis. The physical market and the paper market are about to collide, and we've got less than 24 hours before impact. Look, I need to explain why this is different than every other silver shortage story we've heard. We've had low COMEX inventories before. We've had high delivery demands before. We've had rumors of central bank buying before, but we've never had all of it at once while the physical market is already this stressed. Let me show you where we are right now. Physical premiums are already running 18-22% over spot for retail. That's not normal. Normal is 3 to 5%. Even in 2020-2021, premiums peaked around 25-30%, and that was considered extreme. Industrial buyers are paying 12 to 15% over spot on 1,000 Oz bars with 8 to 12 week delivery times. I've confirmed this with 3 separate industrial contacts. They're panic buying. Not price-sensitive buying, panic buying. Refinery capacity is maxed out. There's no spare capacity to increase supply in the short term. The silver that exists is what we have to work with. Mine supply is basically flat and can't respond to price in the short term. It takes 18 to 24 months minimum to bring new production online. So we're in a market that's already tight, already showing stress, already running deficits for 3 consecutive years, and now you're going to add potential COMEX delivery failure forcing cash settlements or rule changes, 4 Asian central banks announcing hundreds of millions of ounces of new demand. The paper market has been holding the price down through futures contracts and EFPs. But if COMEX can't deliver physical, the paper market loses credibility instantly. And if Asian central banks want physical, they're not buying SLV, they're not buying futures, they're buying allocated bars in Asian vaults. Physical, that has to come from somewhere. Here's the thing everyone misses. The silver market is tiny. Total above-ground investment silver is estimated at 2 to 3 billion ounces globally. Sounds like a lot until you realize that at current prices, that's only $84, $126 billion total. For context, Apple's market cap is $3.5 trillion. The entire global investment silver market is about 3% of one company. When you get real serious institutional demand hitting a market that small, that illiquid, that already stressed, price doesn't move linearly, it gaps, and I think we're about to see that gap. All right, let me show you how we get to $100 because it's not as crazy as it sounds. Silver's at about $80 right now. $100 is a 138% increase from current levels. That sounds massive. But let's work through what needs to happen. Phase 1, the initial shock, 24-48 hours. Asian central banks announced tonight, 8 p.m. EST, market opens in Asia. Silver futures in Singapore to Hong Kong immediately gap higher. COMEX opens tomorrow, already under pressure from Asian session CME meeting at 2 p.m. Potentially announces delivery delays, force majeure, or position limits. Paper price jumps 15 to 25% in the first 24 hours to 48 out 520s. That's not $100 yet, but it's the setup. Phase 2, the physical disconnect, 48-72 hours. Physical dealers can't source metal at $50 premiums explode to 30 to 40% over spot retail buyers panic, trying to get physical at any price. Industrial buyers who've been waiting for lower prices all bid at once. Actual transaction prices for physical are now 65 or 75 O's, even though spot shows 52 Rs. Now you have a 40 to 50% spread between paper and physical. That's never sustained. One of two things happens. Either physical sellers flood the market and close the gap, unlikely, where's the metal coming from? Or the paper price gets dragged up to meet physical reality. Phase 3, paper follows physical, 72 hours, 1 week. Arbitrageurs try to buy COMEX futures and take delivery to sell physical at premium. This accelerates delivery demands at COMEX. COMEX either delivers, draining remaining inventory, or doesn't, destroying paper market credibility. Either way, paper price has to rise to meet physical silver hit 75-85 Oz phase 4. The psychological break 100. Once silver clearly breaks $75, every investor who's been waiting tries to enter momentum buyers, trend followers, retail FOMO, all hit simultaneously. Central banks watching the Asian announcement accelerate their own buying. Media finally covers it. Silver hits 40-year highs. The move to $100 happens in hours, not days. Is this guaranteed? No, but the path is clear, the catalysts are in place, and the timing is converging. We need about $15-20 billion in new buying to push silver from $42 to $100 given market size and liquidity. 4 Asian central banks committing 2 to 3% of reserves, that's potentially $24 to $36 billion. The math works. Okay, here's specifically what I'm watching in the next 24 hours, and what you should be watching. Watch Asian financial media, Nikkei, Straits Times, Bangkok Post, Jakarta Post. If the central bank announcement happens, it'll hit there first. What confirms the thesis? Coordinated press releases from multiple central banks announcing silver reserve programs. What kills it? Nothing happens, or announcements are smaller than expected. Singapore and Hong Kong silver futures open. This is your first price reaction. Watch for gaps of 5% or more higher. Volume significantly above normal. If Asian futures gap 8 to 10% higher, that's confirming massive demand. COMEX silver opens. Watch the first 30 minutes. If Asian session closed up 5% plus, COMEX should open with a gap. If it doesn't, there's serious paper market resistance. The spread between Asian physical markets and COMEX futures will tell you everything. Watch for any leaked info from the CME emergency meeting. If you start seeing sources say CME considering position limits or potential delivery delays rumors, that's confirming the COMEX stress. CME emergency meeting results announced. Best case for the thesis, force majeure, delivery delays, or cash settlement options announced. Worst case for the thesis, nothing to see here, routine operational meeting, market close and after hours action. If silver closes up 8 to 12% on the day with strong volume, the move is real. If it gives back gains into the close, the thesis might be wrong. This is your 24-hour window. By tomorrow, we'll know if this is happening. Here's what Western analysts are missing completely, and why I have more conviction in this than most people covering silver. From an Asian perspective, this central bank coordination isn't surprising. It's overdue. Asian central banks have been watching. Western sanctions freeze Russia's reserves, dollar weaponization accelerate gold hit all-time highs, silver stay cheap relative to gold and relative to its industrial importance. and they've been asking, why are we holding 90% of our reserves in dollars and euros when those can be frozen at any moment? The answer is there haven't been viable alternatives at scale. But here's what changed. BRICS Bridge proved alternative settlement systems work. Russia's silver-backed ruble showed commodity backing is operational. Saudi Arabia is exploring gold backing. The infrastructure for commodity-backed reserves now exists. So for Thailand, Indonesia, Malaysia, Vietnam to coordinate silver reserve programs makes perfect sense from their perspective. Diversification away from dollar risk strategic industrial metal, they all have solar EV manufacturing goals. Undervalued relative to gold, gold-silver ratio still around 95.1. Small enough to accumulate without moving the gold market, ASEAN coordination. They've been coordinating economically for years. Western media will frame this as risky emerging market bet on silver. From Asia, it's prudent diversification using an undervalued strategic metal. I'm Asian. I talk to people in these countries. I watch their media. The sentiment shift toward commodity reserves is real. It's accelerating, and it's not going to reverse because Western analysts think it's odd. If these announcements happen tonight, it's not a surprise move. It's the culmination of 2 to 3 years of planning. And if 4 central banks do it tonight, 6 more are watching to see if it works before they announce in the next 60, 90 days. This is the beginning, not the end. All right, let's get specific, because knowing what's happening means nothing if you don't know what to do. If you already own physical silver, do absolutely nothing. Don't try to sell into a spike to buy back lower. In a genuine repricing event, you sell physical, and you might not get it back. Just hold. If this plays out, your 28 Oz silver from 2024 is about to be 100 Oz silver. Don't get cute. If you don't own physical yet, you have until probably tomorrow morning to get physical near current prices. After that, premiums are going to make it prohibitive. Call your local dealer today. Don't wait for online orders. Physical in hand is what matters. What to buy. Government coins, eagles, maples, philharmonics. Most liquid recognizable bars. 10 Oz, 100 Oz if you can afford it. Avoid premium collector stuff. You want the most metal for your money. If dealers are already sold out or quoting 25% plus premiums, you're probably already too late for this window. If you're trying to time it or buy on a dip, I think you're making a mistake. But if you're going to wait, your decision point is tomorrow. If the announcement happens and is substantial, prices tomorrow morning will be higher than today. Period. If you own mining stocks, this should be the most explosive part of the move. Miners have operational leverage to silver price. If silver goes from $42 to $100, mining margins go from 40% to potentially 200% plus. Stock prices typically move faster than metal prices. But, and this is important, only if you're in quality miners. Junk companies will still find ways to fail even with $100 silver. Focus on First Majestic, Pan American Silver, Hecla, Mag Silver, maybe Wheaton Precious Metals for the royalty exposure. If you're in SLV or paper silver, you'll capture the price move, yes. But understand, if we're right, and this is a physical crisis, the spread between SLV and actual physical silver is going to be enormous. SLV might show $85 while dealers are selling physical at $159. You can't convert SLV to physical as a retail investor. If you're in SLV and it runs, consider taking profits and converting some to physical. If you have cash on the sideline waiting for confirmation, tomorrow's Asian announcement is your confirmation. If you wait for Western media to cover it, you're 24 hours late. Set an alert for 8 p.m. EST tonight. If the announcement happens, that's your signal. Look, I'm making a big claim here. $100 silver, 24-hour window. I need to tell you what would prove me wrong. Scenario 1. Asian announcement doesn't happen. If we get to 9 p.m. EST tonight and there's no central bank announcement, 50% of my thesis is gone. We might still see COMEX stress, but without the demand catalyst, we probably don't get the explosive move. Scenario 2, CME meeting is nothing. If tomorrow's CME meeting is actually routine and there's no delivery crisis, the supply side of the thesis falls apart. Maybe we still get a rally on Asian buying, but not the $100 move. Scenario 3, physical appears. If suddenly millions of ounces of physical silver hit the market from sovereign sellers, industrial destocking, or ETF redemptions that actually deliver, the supply crisis eases. Don't see where it comes from, but it's possible. Scenario 4, price gets crushed. If, despite everything, COMEX paper market somehow drives price down tomorrow, I'm completely wrong about the setup. Would mean the paper market still has control and physical market stress doesn't matter yet. What I'm watching to know if I'm right, by Friday close, silver should be above $60 if this thesis is correct. If we're still sitting at 42 to 45s by Friday, I was wrong about the timing or the magnitude. By next Monday, 1 week, we should be approaching or past $75 if the full move is happening. If not, this was either a false alarm or a slow burn that takes months instead of days. I'll do a follow-up video this weekend, regardless of what happens, and tell you exactly where I was right or wrong. Step back for a second. Whether this specific 24-hour window is the catalyst or just a catalyst, the direction is clear. We're in year 3 of structural silver deficits. Industrial demand is accelerating. Mine supply is flat. Above-ground inventory is declining. COMEX registered inventory has been bleeding for 18 months. The Asian monetary shift toward commodity reserves is real and accelerating. The BRICS alternative systems are operational. The dollar's role in trade is declining measurably. Silver sits at the intersection of all of this. Monetary metal being added to central bank reserves, industrial metal critical for energy transition, tiny market that can't absorb large institutional flows without massive price moves, undervalued relative to gold, relative to historical ratios, relative to everything. So even if I'm wrong about the exact timing, even if it's not this 24-hour window, the structural case for significantly higher silver prices is overwhelming. $100 silver isn't a moonshot. It's not a conspiracy theory. It's basic supply and demand in a market that's broken. The only question is when, not if. And I think when is in the next 72 hours. But even if it's 3 months or 6 months, if you don't own physical, you're betting against math. Here's where I am. I think we're in the 24-hour window before silver makes a move to $100 that most people won't see coming until it's already happened. I think the combination of COMEX delivery stress and Asian central bank coordination is the catalyst that breaks the paper market's control over price. And I think if you're watching this before tomorrow at 8 p.m. EST, you still have time to position. If you're watching this Friday or next week, you're probably chasing. I'm not selling any of my physical. I'm not waiting for confirmation. I'm positioned for this exact scenario because I've been watching the pieces move into place for months. Could I be wrong? Absolutely. The announcement might not come. The CME meeting might be nothing. The market might absorb this stress like it has before. But the risk reward here is massively skewed. If I'm wrong, silver stays around $40 and I still own an undervalued metal in a structural deficit. If I'm right, it's at 100 plus by next week. That's not a hard decision for me. Set your alerts for tonight at 8 p.m. EST. Watch Asian financial media. Watch Singapore futures at 9 p.m. Watch COMEX tomorrow morning. Watch the CME announcement at 2 p.m. and comment below as you see things happening. I want to know what you're seeing in real time. Are dealers sold out? Are premiums spiking? Did the announcement happen? Let's track this together. I'm John Asian Guy, and the next 24 hours are going to be wild. Let's see what happens.